Tuesday, August 22nd, market analysis. Stan Ehrlich, good morning. 10:04 California time, a little bit past the middle of the trading day. Today we have a little bit lower levels at the moment. Not too much, but you should expect a little bit of a dip, obviously, as the market marches its way to test previous highs and higher, potentially. And that's exactly what I think we have started to do. But you can't rule out the possibility of a little bit more toppiness and then into September, October, the October lows. Again, last year, the October lows were unbelievably perfect. I haven't seen an October low like that one in, well, decades. So I don't expect it to be quite as perfect, period. We'll talk more and more about it as it begins to develop. Right now, we're challenging the low of the day on the spider, and on the daily data chart, we were oversold for 3 days, and this morning we got out of that condition, and we're slipping back down, maybe to retest the support level it's already bounced off of once, and that's around 432, a little bit higher, a little bit lower, right in that 432 area. But do not forget, there is a gap, and that gap is down at 423 and a third. I'm afraid to say there's a chance we could get all the way down there, especially if it happens very fast and a little panicky. That would probably finalize this break, which has already been a little bit more than I originally expected. Remember, we did get a reversal, a bearish engulfing, smack dab at the top of the rocket. I talked about it before it happened, during it happening, and after it happened, July 27th, in an area of resistance, overbought conditions, and a bearish engulfing. End of story. Took a few days for it to start to slip, but when it did, it gapped down. So now you have a gap below the market, and we're heading down at the moment. Oversold conditions could bottom this out. Today is one of those hingy days where we can't make new lows below last Friday's lows on a closing basis in particular, or we'll be sitting on support and maybe break right through it and close the final gap down here at 420, 423, 424. On the other hand, any recovery, especially now that we're near the low and the spider 1 minute chart looks like this, we might just hold here, pop right back up again. Be nice to close a little bit in the green above the previous day's close, which is right above this rally. Let's call it 430, 440 would be great, or higher. And that would be very constructive, especially since we bounced off a little support. But I don't know. The next half an hour will tell. My basic opinion, of course, is that I'm bullish, whether we're going to go down another 10 points or so, turn around and start to head north for months still, or it was last Friday at support, oversold, and we just simply didn't get a bullish engulfing green, which we of course did on October 13th, the very bottom of the bear market, the beginning of this bull market, and periodically. So let's look at the DIA. We are testing right now the low of yesterday and the day before. So far, today, yesterday, and Friday of last week, we hit support, bounced off of it. It remains to be seen whether we're going to do it again. Is third time the charm? Not quite sure here. But there's more support just a little bit lower than that. And again, more support a little bit lower than that. And frankly, there's a whole mess of support tumbling down here for quite a bit of decline. So the DIA may be a little bit harder to peg at what level it's going to turn back up. But that's exactly what I'm expecting. We're still oversold. Wouldn't be surprised if we just saw the lows a few minutes ago. On the QQQ, we got oversold. Not particularly at a support area per se that I was able to detect. and started to head up. And we are still relatively firm. We're only down $0.50 at the moment, and coming back down to a support area that kind of held. All the closing prices were in that little red zone, and now we're trying to pop our head out, stay up, and keep going up. There is one gap to close. It's significantly higher, close to the high of the whole trend at 380.25. So that would be great if we headed straight for that and then kept on going, which is pretty much what I'm looking for. Trying to figure out where we're going to have one more round of new lows, and if so, how severe. But that's pretty much about it. The Russell 2000 has a no man's land area, but a gap to close at lower levels still. Not super close, but not too far away. And nothing above the market as far as gaps, but it's been oversold for several days now. It looks like 7, and that's quite a few. And the oversold, the lowest level of the oversold condition was below 10. Super profound usually, and produces some significant turning points either on the day that they are the lowest low, which is typical, or maybe shortly afterwards, like this one back in March. And that's the last time it was down in the realm of 11, 12, not even quite 10. It's been a long time. January of 22, the last time this was at 10. That's saying something. Okay, futures. The E-mini, of course, is the spider, basically, longer trading hours, same commentary. And the NASDAQ futures, NQ, oversold conditions for 3-day, bouncing very nicely. Need to get some more upside follow through, and would not like it a damn bit if we close really badly today. That would lead to a new low and maybe that last leg down, so to speak. Some people might mention Elliott wave number 5. Some people might mention exhaustion weakness. We might even see a downside exhaustion gap. Well, all of those little things you look for. Next chart is bonds are finally bouncing a bit. We are oversold for 4 days. And this could be the turning point I expected to have happen in the higher levels. In fact, we did get a bullish engulfing, and I thought that was it at the time, August 4th. But we dribbled on down and made new lows and got into oversold conditions again. And this is a new low for the bond market again, last couple of days, for a very long time period. Going back to 2015. Okay, so this could be the start. If we all of a sudden have a bullish engulfing green like we did on August 4th, I'll scream bloody murder again. Can't help it. Follow your disciplines. Next chart is 10-year notes. Basically the same story completely. Next story is crude oil. We sold a high 2 weeks ago. About an area, well, basically in an area of resistance. So a couple of day rally. Yesterday started to work its way a little lower. Today we're a little bit lower again. I do expect to see new lows for a couple, 3 weeks very soon, by the end of this week. And I would be looking for another move into this red zone here below 73. Next chart. Heating oil. There's a head and shoulder bottom, maybe top, sorry, maybe. This little bump here is the first shoulder, and then you have the low for the neckline. You have the rally to the new high ground, which was on August 10th, and the highest high for the move, and a move back down in the same ballpark, not that close to the previous low before the head. Neckline would, in this case, slant up a fairly substantial amount, a little bit on the borderline. But this last high yesterday, although it's a little higher than I would have expected, and I said so in the last couple of days, is still sticking out like a sore thumb. And it's not quite close enough for a double top. Some people might think so, and I don't care. It's going to have the same downside ramifications. And we'll see how this pans out. Maybe a shoulder high here yesterday, and a little bit of a bounce doesn't mean much at the moment for today. Next chart is natural gas. Big flat sideways, I'm going to go to sleep here, sideways trading range, but we did have a bearish engulfing a few days ago And that means you're supposed to be short. And we are now about to make new lows, it looks like, for the time frame, almost new lows, but a new low close would be nice. So there's nothing wrong with that sell signal so far. My signals don't necessarily occur the day you're overbought, oversold, but within a short period of time. So that's legit. Next, we sold the top, and that was gold. And yesterday, we had a bullish engulfing in oversold condition buy signal. Today, this warrants looking at a little closer. Today, we opened slightly higher, dribbled down to the bid for our ER3 new long position, slipped a little bit more, and has now come back so that we are above where we bought it, which was, I believe, 1921.30, 1921.3. And our protective sell stop started out at a minimum at 1913.4. So it may have already started to come up, but I don't show that on these daily data charts. We monitor these trades using 1 minute data, and that has a constant, minute by minute, constantly trailing stop that does move maybe many times a day, maybe not even once a day, depending upon how the market reacts. So far, so good. We're long ER1 because you're always in on the green bar, bullish or bearish. ER1 gets in on the day of the signal. ER3 gets in within a couple of 3 days after the signal, and we got in today. Yesterday was the signal. So far, so good. Next chart. Guess what? Silver. It's even better. And I am showing you in this particular case the actual ER3 strategy being plotted as it would develop day by day on this daily data chart. So you've got sell signals at the highs. You've got a buy signal 3 days ago at the bottom of the gold market drop when we were short from the top of the rally or a couple of days after. So now we just basically flip-flopped at the bottom. First day up, closed with no profit, no loss to speak of. Next day, yesterday, whopper, turned out to be a great rally day. We're off and running, and now we have a little bit more strength. New high, looks like new high close. Not very close to overbought yet. Elbow room to go up, I don't know, maybe 24-ish. But you got to start to watch out for corrections, and that'll be normal. I'm bullish to the tune of probably 24.5. And it might even get all the way back up to where it was before, 25 and 25, 35-ish. Next, yep, we bought the bottom in the platinum market also. Don't have the strategy running on the screen. All we have is what we call color. It identifies where the bid and offer are for entry and exit orders. And we're off and running. We got long almost at the damn low of the day on August 18th, day after the green bullish engulfing ER buys. This is all automated. You sit back with a cold beer and watch. Next chart. We bought the bottom. Copper. All four metal markets, all three precious metals, have had a bullish engulfing buy signals that are working. So great. New high close. Copper had a buy signal, I think that's Thursday of last week. Smack at the bottom. Love it. And a sell signal on top. Okay, next. Sell signal on the top. What is this? Soybeans. Dropped the market back down to major historical support. Huge major historical support. Bounced off of it for a week, but we're breaking down a little bit today. If you have the inclination that you want to maintain a bullish stance from a technician's point of view, you certainly can't go below the blue zone, that major support area we've already bounced off of a couple of weeks ago. That is significant support and should not be broken on a closing basis in particular. So coming down sharply today does not mean that's going to happen. We may just turn right back up again. And if you're of bullish persuasion, You want to see new highs and you want to see it break into total new high ground. If so, I'm afraid to say, watch out for your tofu prices, because this soybean market could just go up a lot. On the other hand, breaking the blue zone, getting below 1280 may very well lead to a move all the way down to 1088, which could be hugely bearish long term. The weather goofy these days. We'll see what happens. We sold short today at almost the exact high of the day. On the soybean oil, we have a bearish engulfing yesterday. It's working great today. I can't help myself. Next. Not much to say about meal. I think I said the same thing yesterday. Not sure, pass. Okay, corn. New low close, and coming very close to a major previous low that was made a year ago. Plus. So if that price level at about 454 is broken, and we're 461 at the moment, you have a hugely bearish long-term major breakout. We're not even oversold yet, or that close. So it could, in a matter of by the end of this week, be down in the 20s or something. That wouldn't shock me. 30s and 20s. It depends upon whether we can bounce off that support where we are right now a little bit, but the more important one, of course, is 456. Let's call it. Let me be a little bit more exact here. For Christ's sake, I'm going to tell you exactly. 453 3/4. Call it 454. Next. Wheat. Looks like it's going to make new lows. Trend is down. Support is starting to give way or breaking into new low territory on a closing basis. It's not particularly super fast. Remember, we've come down, and these are the lowest lows since the beginning of the war, when wheat went limit up bid for many days in a row. Reminds me of the Russian grain deal in 1972-3. Okay, bearish on wheat. Can't help myself. Although, this could be approaching soon some kind of climactic major long-term sell-off. I just want to say that. Next, cattle broke a bull trend line, bounced a little yesterday, and slipping back down fairly quickly today. That trend line break is looking a lot more significant at the moment. We sold the top. Yep. High day in cattle is a bearish engulfing red sell signal. That's not a bad one either. That one worked okay, not great. We got almost the bottom there, and we got the bottom right there. How about that high right there? And a few more here and there. Some of them didn't work. I'm not going to point out, all of them. Not too much to say about live hogs. Going to pass a little bit on that. And we're back to orange juice, which looks a little like a blow off top, but I can't decide. Overbought conditions causing a correction. Cocoa, we sold the top. And now it's starting to head into new low ground again. I'm looking for a test of 3.317 and even lower. Coffee had a buy signal Friday of last week. We're dipping down to the bid at the green dot at the support level, and I think we're about to turn back up in coffee to at least 155. Wouldn't be surprised to see 168. And sugar starting to show some more weakness. I'm bearish down to about 20. Cotton, the rag, double topped out. One of the highs is a bearish engulfing in a resistance area. Didn't quite break support in the last couple of days, so we got a little bit of a bounce here. I don't think it's going anywhere, and I do expect it to make new lows real soon. And that's it, ladies and gentlemen. Thank you for your time. This is a long one today. Mañana.